This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant Nair, and with me are my colleagues Surabhi and Nigel. Guys, hi. Good morning.
Good morning.
Good morning, Nigel. Good morning, Prashant. And yes, I know we're going to talk about markets, cues, and what's happening in the global setup and all of that. But I just want to start by wishing our scientists, those fantastic men and women at ISRO, all the very best, because Vikram is making its way to the moon. I think between 5:30 and 6, I know where I'm going to be absolutely glued to that YouTube or television feed. Really hoping for the best. Maybe the fourth country to finally land on the moon, and the first to land on the south side. And that's going to be quite something.
Yeah. And I think that is important because that's where the water is.
Yes.
That's where there's a reason why
there's a race.
Absolutely. That is important. So, yeah, absolutely. I mean, that's later today. By about 3:30, post 3:34 or so is when we're expecting that to really happen.
Just a small point yesterday, because I was really excited about this, reading a lot about this. After, USSR, not USSR actually anymore, but Russia's, unfortunate events over the weekend with their mission kind of terminating. I think all eyes on this one. And if India manages to do this, it'll be quite a scientific marvel.
Yeah.
And then to get out for the rover to get out on the surface and start experimenting over the next couple of days, it would be indeed a very proud moment for all of us.
Absolutely. Well, it's going to be something. We'll of course get you live coverage of that later in the evening. Well, as always, let's quickly look at the markets then and take a look at what you need to know as we begin another trading session. So here we go. We got yesterday, which was a day of consolidation, right? I mean, nothing happened. The Nifty was absolutely flat. Mid-cap index made a new all-time high. We'll talk more about this a little later and put this into context. But we did hit a new high in the mid-cap index. The small-cap index, as of yesterday, is just about 200 points away from hitting its own high. So not very far away. Could happen with a day or two of gains. From global markets, there's not very much by way of action. The S&P was down a little bit, about 0.25% or so. I think you've got the Nasdaq, which was absolutely flat, so nothing. The 10-year is holding. It was down 1 or 2 basis points, but holding above 4%, 4.3%. The dollar index actually went up a little bit, about 103.5, 103.6 or so. So that's the global setup. As I said, I mean, things are holding still calm. Later today, we'll get out of the U.S. market session the NVIDIA results. That's the advanced chip maker, which of course has been the poster boy for all the AI-related frenzy. And those numbers are going to be important for the entire tech complex in the U.S. For the wider market, what is of course a significance, as we've highlighted for the last 2 days in the U.S. is the Jackson Hole Symposium and Powell's speech, which is on Friday. So that's the U.S. action for you. Nothing incremental or new as we begin today's session. Now, the Nifty, as I said, we had a bit of a consolidation kind of session. Because the markets moved up a little bit, we need to now close above 19. The level I put out yesterday was 19,400, which is where the markets have been around for the last 2 sessions or so. We need to close above it. We ended just under it, like the previous day. We need to close above the upper end of the falling channel, which has come up a little bit to about 19,440. So that's the first level to really sort of keep an eye out on. Then you've got the 20-day moving average. I mean, the levels have not, I mean, the numbers have changed a bit, but the logic and the markers remain the same. The 20-day stands at 19,540 or so. Support is the lows that we saw last week, which is 19,253. So that's the setup broadly on the Nifty. On the Bank Nifty, we get the Bank Nifty did not cross the upper end of the rising channel. Resistance then becomes yesterday's high, which is 44,151. Again, that's a very, very near-term number, but the Banks index has been the weaker of the two, the Nifty and between the Nifty and the Bank Nifty. So yesterday's high, the first level, 44,151, and support then comes in unchanged at 43,600. Looks like the market's kind of, the index, the Bank Nifty that is, has bottomed out around those particular levels. So, just a kind of a quick look at the levels which are in play. The implied open is indicating a 27, 28 point lower start. Maybe we get a bit of a quieter start once again. Intraday, you get, rallies, but they also sometimes get sold into like yesterday. So unless you're a compulsive trader, I think the advice still is to kind of sit on the sidelines and wait for a clearer kind of trend to emerge in terms of the index, the indices, both the Nifty and the Bank Nifty. Stocks, of course, it's a whole different ball game with momentum chasing so many different parts of the market, so many stocks, sectors, subsectors which are participating. So we'll talk more about that a little later. Surabhi.
Prashant, it's like, right, we were discussing yesterday, it's as if there are two different markets. One that looks at all these global cues and US indices and what's happening to bond yields. The other that just doesn't care.
The small caps don't care, Surabhi. It's 2%, 5%, 2%. They don't care.
4.3% yield, 4.5% care. It's a completely different market, even in terms of sentiment.
It's like you're going to this ballroom dance. Everyone's doing the classy dance out there. But the small caps are saying, this is my space, right? I'm doing the break dance.
Yeah, absolutely. I don't care about the walls and the jazz.
I'm wearing my loose pants, baggy shirt. I'm on.
I'm rocking it on. I think you hit the nail on the head.
Nigel did, huh?
I could have a vibe, yes.
Let's not get there.
Maybe on Friday. But all right, back to the markets. Just to add to the points that Prashant was making, obviously that yield is in focus. And yesterday there was some relief because at least that number came back down to 4.3. But the markets are a little nervous. There's no taking away from that. Remember, the bank stocks are the ones where there is some pressure. It's not a big slide or anything. But the other fact that this market is digesting increasing downgrades of U.S. banks. We had S&P, of course, on Monday come out and downgrade a couple of mid-sized U.S. banks, specifically the ones that have higher exposure to commercial real estate. And that's a big talking point in the U.S. as well. What is happening to the realty market there? And the spillover sentiment was quite evident on the others as well, the big boys. JP Morgan, Wells Fargo, Bank of America, you name it, Citi, all these stocks were down between 1 and 2%, not entirely able to shrug off what the rating agencies have been increasingly saying. So that's another watch point. Jackson Hole, obviously, is the big one. We will probably hear the Fed chair speaking on Friday, and perhaps markets will tread water ahead of that. Not too many data cues from China this morning. Some PMI surveys in Australia, which are negative. The Japan macro data slightly positive. So it's all over the place. Nothing very substantial in terms of big cues from Asia today. Oil is range bound, and that's a good cue for us at least. It's still around 84, 85 on Brent, so there's no big move on oil. I just want to cap off by talking about the way the flows are shaping up, the FPI flows in our market. Yesterday we had a sell figure yet again. It's the fourth consecutive day of FPI selling, where they sold off about 500 crores. It wasn't a problem because domestic institutions have been buyers. They netted that off almost entirely with a buy figure of over 500. But the fact is there is consistent FPI selling. In fact, the inflows have petered down, and it's important to put that data on the table as well. These are the bars I'm talking about. Look at that, this blockbuster rally that we had in May, June, July. A lot of it was courtesy. There's a huge wave of liquidity that was sweeping through our markets, 45,000 crores, 47,000 crores on a daily basis. That's come down quite substantially. It's even lower than April. We are on August 23 today, so let's see how that plays up. But the fact that there's some pullback of FII money, that's something that perhaps worth putting on board. But Nigel, you tell us in terms of levels, in terms of the key triggers to watch out for. What are you looking at?
Since we're in this band of around 350, 400 points out, it continues to remain a scalper's market. I've been making this point for the last few days. So that is, you buy the intraday dip, you sell if you get a bit of a bounce, but you don't carry your position. And that seems to be playing out as well on a day-to-day basis. Well, just to revise what's happened in this fiscal year so far, you'll see the Nifty has done quite well. But the broader markets, well, that's where the real party is. So in case, you're looking at the Indian markets, you're saying it's quite boring, we're moving 200-300 points. Well, there are plenty of stocks out there that are making big money. So it's a stock-specific market, so to call it. Now, yesterday, you'll say the Nifty ended flattish. Well, why did that happen? You pull up the Nifty Financial Services Index. That played out the expiry yesterday. And there's a bit of an overlap with the Nifty Bank as well. Both of them ended to the low point of the day. And that's because the Nifty Financial Services Index played out expiry. Now, you also had another, point that is one small part of the market that's dragging. The Geo Financial Services, well, that's listed. And unfortunately, it's hitting the lower circuit because of those passive outflows and the likes. So that was down close to around 5%. That's dragging the index by close to around 10 points. And now we know that it will continue to remain part of the Nifty as well as the Sensex for a few more days till it doesn't hit circuit for 2 more sessions. We have clarified this with the exchanges as well. So it requires 2 sessions where it doesn't hit either upper or lower circuit. Then it will make its way out of the Nifty as well as the Sensex. Well, moving on then, what are the FIs? How are they positioned? Well, they have 57% of their positions on the short side. Nothing has changed too much. On the option side, there was some call writing yesterday. 19,400 call, 19,450 call. There was some writing that we've seen at those levels. But if we look at the highest open interest on the call side, well, post that yesterday's edition, the 19,400 call has the highest open interest, close to 1.5 crore shares. On the put side, the 19,300 put has the highest open interest. So you plug in both those 2 premiums. You add the premium to the call, you deduct the premium from the put, and you'll get your levels. On the downside, 19,270, that becomes the day's support level. On the upside, 19,450, that's a very, very crucial mark because of the call writing we have seen at around 19,400 or thereabouts. The 50 DMA, that's somewhere the mid mark at around 19,335. The Nifty Bank as well, it's finding resistance at around 44,200 also. Just putting out the broad points out there. The recent low and the 100 DMA, you'll want the Nifty Bank to hold on to those levels. The GIFT Nifty suggests that we pull back a little bit. I think if you get a little deeper dip, not 20, 30 points odd, as we have seen, 50, 60, 70 points odd, maybe you look to buy in and exit the position as well if you get a bit of a bounce. Stop loss as well, most vital. So a scalper's market, so to call it.
Okay, that is indeed what it is. Let's quickly kick things off then with the equity call of the day. Amit Sachdeva of HSBC says the FTSE India index is up 16.7% in US dollar terms versus the FTSE Asia ex-Japan, which is down 5.2% as of August 21. This is led by $21 billion of FII flows, well supported by strong earnings outlook and relatively stable macro conditions. After this rally, he says India valuations have risen. Inflation has shown a somewhat worrisome uptick, as July inflation came in at 7.4% and crude has inched up. Amit says, amid escalating concerns on global growth, India still stands out, but earnings resilience is key to sustaining this positive momentum.
Okay, some money market views then. We have Kunal Sudani of Shanghai and Bank, who says that improvement in the US existing home sales for the month of July and the Richmond Fed Manufacturing Index for August joins firmer Treasury bond yields and in turn a firmer dollar index. He says traders will likely keep their powder dry for the main event on Friday with US Fed Chair Powell's Peter Jackson Hole. He hands for the USD INR 82.85 to 85.9 to a dollar, acts as a support, while 83.2 to a dollar is a resistance.
Let's move to bonds. Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 7.21 to 7.25% last week. He says bond yields initially spiked higher on higher CPI print as well as weak global cues, but retraced slightly on better than expected demand in the weekly auction. He says this week is light on data and market will take cues from Fed Chair Jerome Powell's comments at the Jackson Hole Symposium. He says weekly auction demand will also determine the course of yields going forward. He's expecting the 10-year to trade in a range of 7.18 to 7.28% for the week.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment, but we're looking at Crompton, BEML, RITES, Linde India, SJS Enterprises, and TRF. 6 stocks that we expect to open up in the green. On the flip side, you have a few stocks like some banking names, Brightcom, NetWeb Technologies, and ONGC that could be reacting to negative news flow.